Something massive just happened in the truck market, and it's sending shockwaves through the entire auto industry. Imagine walking into CarMax and seeing a fully loaded Chevy Silverado or GMC Sierra, trucks that used to cost over $60,000, now sitting on the lot for half that price. Yep, you heard that right. CarMax just slashed GM pickup prices by nearly 50%, and everyone from Ford to Toyota is scrambling to figure out what just happened. But the bigger question is, why did CarMax make such a drastic move? And what does this mean for the future of truck pricing across America? CarMax, one of the largest used car retailers in the US, just pulled off a pricing shock that's caught both consumers and automakers completely off guard. Over the past few weeks, reports started circulating that GM pickups, especially 2021 to 2023 Silverado and Sierra models, were being listed at unbelievably low prices. Some buyers even shared screenshots of trucks once listed at $58,000 now going for as little as $29,195. At first, people thought it was a glitch. But no, it's real. CarMax has officially adjusted their valuation algorithms and inventory pricing across hundreds of locations nationwide, marking one of the biggest used truck price corrections we've ever seen. Now, why did CarMax do this? Well, insiders say it comes down to one thing: oversupply. Over the last year, GM dealers and leasing companies flooded the market with used pickups after new sales started slowing down. Combine that with high interest rates, expensive insurance, and fuel costs pushing buyers away from big trucks, and suddenly, CarMax was sitting on a mountain of unsold GM inventory. These trucks were depreciating fast. Too fast. So, rather than holding on and losing even more money, CarMax hit the reset button. They cut prices hard, hoping to move units quickly and reignite consumer interest. And let me tell you, it worked. Buyers are rushing in. Truck enthusiasts, small business owners, and even casual drivers are taking advantage of the deals, snatching up models that were previously out of reach. Online listings are going viral. Social media is flooded with posts saying, "Is this for real?" And many buyers are reporting they're seeing prices they haven't seen since pre-pandemic times. But while consumers are celebrating other automakers, they're not exactly thrilled. Over at Ford, Ram, and Toyota, executives are reportedly in panic mode. See, when CarMax drops prices on used GM trucks, it creates a ripple effect across the entire truck market. Buyers who were considering a used F-150 or Ram 1500 are suddenly comparing them to deeply discounted Silverados. That forces competitors to either match those price drops or risk watching their inventory pile up. It's a domino effect that could drive used truck values down across the board and even put pressure on new truck prices too. Dealerships, on the other hand, are furious. Independent dealers who stocked up on used GM pickups months ago, expecting prices to hold, are now finding themselves completely upside down on their inventory. Trucks they bought for $50,000 at auction are now worth maybe $35,000 at best. Many are accusing CarMax of crashing the market just to gain headlines and clear out old stock. But from CarMax's point of view, they're just responding to reality. The era of overpriced trucks might finally be coming to an end. And this move isn't just about prices, it's about market correction. For years, pickup trucks were selling like luxury vehicles, with markups, dealer add-ons, and financing terms that stretched buyers thin. But now, this slash in pricing is forcing the industry to face some hard truths. The bubble might be bursting, and CarMax may have just lit the fuse. The reactions are split. Buyers are ecstatic, dealers are furious, and automakers are nervous. But the real question everyone's asking right now is this the beginning of a bigger crash? If GM trucks are dropping this much, how long before Ford, Ram, and even Toyota models follow suit? Could this be the start of a used truck price war, unlike anything we've ever seen before? Because here's the thing, when CarMax moves, the rest of the market has to respond. They're too big to ignore. And as prices tumble, trade-in values are collapsing right along with them, leaving thousands of recent buyers underwater on their loans. Imagine buying a Silverado just 6 months ago for $55,000, and now realizing your truck's worth barely $35,000. That kind of depreciation hits hard, not just for owners, but for the lending institutions backing those loans. And that brings us to something even more unsettling: the financial side of this meltdown. Lenders and banks that finance those trucks are watching their collateral values sink overnight. That means higher default risks, tighter lending standards, and fewer approvals for future buyers. It's a chain reaction that could stretch far beyond just GM pickups, potentially shaking confidence in the entire auto finance system. But it's not all doom and gloom. Some experts believe CarMax's move could finally bring sanity back to the truck market, making these vehicles accessible again to average buyers who've been priced out for years. However, others warn this is just the first sign of a much larger correction that could hit the entire used car industry. And that's where the story really starts heating up. Because behind the scenes, GM executives are reportedly scrambling. Sources close to the company say internal meetings have been tense as leadership tries to figure out how to control the narrative. Remember, GM has spent years pushing luxury tier trims like the Denali, the High Country, and the AT4, high-margin trucks that rely on the perception of premium value. But when those same trucks suddenly start showing up at CarMax for half the price, it doesn't just hurt sales, it damages the brand image. GM can't officially tell CarMax what to do with pricing, but the optics are terrible. Buyers are now asking, why should I pay 70 Kelai for a new Silverado when I can buy a barely used one for 30? That question is spreading fast, and it's something even GM's PR team can't spin. Insiders say dealerships are begging GM for rebates and incentives to help move new inventory before the used price collapse hits them too. Because make no mistake, if new truck prices don't adjust soon, showrooms could start emptying out fast. Meanwhile, over on Wall Street, analysts are watching this with raised eyebrows. CarMax's stock initially dipped after the announcement. Investors hate uncertainty. But then something interesting happened. Volume picked up. Analysts began suggesting that CarMax's aggressive pricing might actually be a strategic power play. See, CarMax has more data than almost anyone on used car demand. If they're cutting prices this sharply, it's because they know something about consumer sentiment, about where the market's heading, about what people are really willing to pay. Some investors are now speculating that this is CarMax repositioning itself as the leader in a post-bubble market, a market correction that they plan to control, not fear. And the ripple effects don't stop there. Fleet companies, government buyers, and construction businesses that rely on pickups are suddenly rethinking their purchasing strategies. Why buy new when used trucks are dropping like rocks in value? Many are holding off on 2025 orders entirely, waiting to see if the pricing slide continues. If it does, GM's new truck production could face serious cutbacks. And that's not just bad for GM, it's bad for suppliers, for workers, for entire regional economies built around truck manufacturing. On the consumer side, the mood is mixed. Truck lovers who've been waiting years for prices to normalize are ecstatic. But early buyers, not so much. Forums are filling up with posts from owners furious that their trucks lost 20 grand in value overnight. One buyer said, "I bought my 2022 Sierra Denali last winter for $62,000. CarMax just offered me $33,000 for it." That's a gut punch. Multiply that story by thousands, and you start to see the bigger picture, a potential wave of negative equity that could rival what we saw during the 2008 financial crisis, only this time centered on vehicles instead of homes. But here's where things get even more intriguing. Whispers are emerging that Carvana and AutoNation might follow suit. Some reports suggest these companies are already reviewing their truck inventory pricing after seeing CarMax's surge in traffic. If they jump on board, this isn't just a CarMax event, it becomes a full-blown industry reset. Prices across the board could tumble within weeks. Ford F-150s, Ram 1500s, Tundras, all forced to follow GM down the price ladder. And if that happens, we could see the first major used vehicle price war in over a decade. The question then becomes, who survives it? Dealerships that rely on high markups will be the first to fall. Smaller independent lots simply can't absorb a 20% to 30% value drop overnight. The big players, CarMax, Carvana, maybe even Costco Auto, will dominate, using volume and data analytics to crush the competition. But that shift could completely rewrite how Americans buy trucks in the future. The ripple effect is also making its way to automakers. Boardrooms outside the US Toyota's North American division is reportedly monitoring the situation closely, worried that falling American truck prices could bleed into the global market and hurt Tacoma and Hilux valuations abroad. Meanwhile, Ram's parent company, Stellantis, is said to be running emergency sales projections to forecast how much inventory could be affected if this trend continues through the end of the year. And remember, we're not even in the holiday discount season yet. If prices are collapsing this early, imagine what Black Friday or the year-end clearance events could look like. Could we see brand new trucks discounted by $15,000 or more just to stay competitive? Dealers might have no choice. The longer they wait, the more they risk being undercut by the used market. But what if? This wasn't just about moving inventory. What if CarMax knows that a bigger storm is coming? Something deeper, tied to a correction in the auto lending market itself. Because right now, delinquencies on car loans are quietly rising. More Americans are falling behind on payments, especially on high-interest truck loans. If those repossessions start piling up, CarMax could soon find itself flooded with even more inventory. And this price cut might just be their way of clearing space for the next wave, and that raises a haunting question. Is this price slash just the beginning of a much larger downturn for the auto industry? And that's exactly where things start to spiral. Because behind all the noise of price cuts and viral deals, something much bigger is brewing in the background. The financial institutions are starting to tighten the screws. Banks and credit unions that once freely approved $70,000 truck loans are now hitting the brakes. Lenders are re-evaluating risk models, seeing the sudden collapse in used truck values as a warning sign that the collateral backing those loans, the trucks themselves, can no longer be trusted to hold their worth. That's a dangerous signal, because when lenders lose confidence in collateral, the entire credit pipeline begins to clog. Buyers who walked into a dealership last year could get approved with little down and long loan terms. Now they're being told they need higher credit scores, larger down payments, and shorter terms. That means fewer buyers can qualify, and fewer buyers means slower sales. Slower sales means more inventory. More inventory means even lower prices. It's a vicious cycle that the industry might not be able to stop once it fully kicks in. Some analysts are even calling this the start of a truck bubble burst. They're warning that the combination of inflated pandemic pricing, overproduction, and high loan defaults is creating the perfect storm. And CarMax's move might be the first domino falling. And if that's true, this could reshape not just used truck pricing, but the entire automotive landscape for years to come. Inside CarMax, though, the mood seems surprisingly confident. According to insiders, this wasn't a panicked move. It was calculated. CarMax reportedly analyzed millions of vehicle transactions, tracked real-time demand curves, and determined that the only way forward was to reset market expectations. Their strategy? Slash prices, drive traffic, and dominate search results. They're betting that while others hesitate, they'll be the first to rebuild consumer trust through transparency and affordability. Essentially, they're saying, let's stop pretending trucks are luxury goods and start treating them like what they are, work vehicles for real people, and that message is resonating. Buyers who've been priced out of the truck market for years are suddenly back in the game. Tradesmen, small business owners, landscapers, people who need trucks, not just want them, are finally able to buy again. Sales reps at CarMax locations are reporting record foot traffic, with some stores selling out of discounted GM pickups within hours of being listed online. One associate even said, "It's like Black Friday every day. People are literally lining up before we open." But while CarMax is cashing in on volume, other used car dealers are feeling the squeeze. Some are quietly slashing prices too, hoping to keep up, but many simply can't. Their financing costs are too high and their inventory too overvalued. It's like watching a market correction in real time. Those who adapt survive, those who resist get crushed. Meanwhile, GM dealers themselves are caught in a strange middle ground. On one hand, they're furious. CarMax's move undercuts their certified pre-owned programs and makes it harder to justify premium pricing. On the other hand, some quietly admit they saw this coming. They've been watching the used market soften for months. The glut of lease returns, the slowdown in demand, the rise in unsold 2024 models sitting on lots, it was all pointing toward an inevitable drop. CarMax just accelerated what was bound to happen anyway, and the fallout is spreading fast. Auction prices are tanking. Wholesale values for trucks have fallen nearly 15% in some regions in just a few weeks. Fleet operators are calling their accountants, asking if they should sell now before values fall even more. Rental companies are dumping inventory early to avoid being caught in the depreciation wave. Everyone's trying to get out before the floor drops again. And that panic, ironically, is making the fall even steeper. But perhaps the most shocking reaction is coming from inside GM itself. Leaked internal memos suggest executives are considering massive incentive programs to move unsold 2025 Silverado and Sierra models before the 2026 refresh hits. Rumors are swirling about 0% financing, aggressive lease deals, and factory cashback bonuses unlike anything we've seen since the Great Recession. GM knows that if they don't act fast, their brand could take a long-term hit, not just in profits, but in perception. Because once buyers get used to $30,000 Silverados, convincing them to pay $60,000 again becomes nearly impossible. And yet, there's still one wild card no one's talking about: the new EV trucks. Models like the Silverado EV, the Sierra Denali EV, and even Ford's F-150 Lightning were supposed to be the future. But with gas-powered trucks suddenly selling for half price, how do you convince buyers to spend $70K to $80K on an electric one? The math just doesn't make sense anymore. Dealers are already reporting increased cancellations on EV pre-orders as buyers shift back to affordable ICE options. The electric truck revolution might have just hit a wall, and CarMax's price cuts could be the crash that stopped it. The whole market is now in uncharted territory. Wall Street analysts are revising forecasts almost weekly. Dealers are cutting costs. Manufacturers are rethinking production schedules. And consumers? They're watching closely, waiting to see just how low prices can go before they make their move. Because if 60K trucks are already down to 30K, what happens when the next wave hits? What if, and this is the question everyone's whispering about, what if this isn't even the bottom yet? And now, the race is officially on. Because CarMax might have started this fire. But Carvana, AutoNation, and even digital newcomers like Shift and Driveway are stepping right into the flames. Within days of CarMax's price cuts going viral, competitors began quietly testing their own dynamic pricing systems, powered by AI algorithms that can adjust vehicle prices by the hour. It's no longer about who has the best inventory. It's about who can outsmart the market in real time. Imagine logging on to shop for a truck and watching the price drop while you're still on the page. That's where this is headed. These AI-driven pricing engines are analyzing search trends, social media sentiment, and even dealership foot traffic to predict demand before it happens. The result? A new kind of pricing war, not driven by salespeople or rebates, but by machines. And once that technology goes mainstream, the old-school dealership model could collapse completely. CarMax's gamble didn't just shake up truck prices. It exposed how outdated the traditional dealership system really is. Buyers are tired of markups, tired of negotiation games, tired of inflated sticker prices that make no sense in a digital world. By slashing GM truck prices in half, CarMax didn't just clear out inventory. They made a statement. Transparency wins. And that's a message that consumers have been waiting to hear for years. Meanwhile, the ripple effects are rewriting the entire market playbook. Ford dealers are already adjusting pricing on used F-150s. Ram stores are cutting lease rates on 1500s. And Toyota is quietly hinting at more aggressive incentives for its 2025 Tundra lineup. It's a full-scale recalibration. The idea that a new truck costs $70,000? That might soon sound as outdated as paying $2,000 for a flat-screen TV. Prices are normalizing, fast, and the consumer is finally back in control. But it's not just about trucks anymore. SUVs, crossovers, even EVs are starting to feel the drag. Once CarMax proved that price elasticity still matters, that people will buy if you stop overcharging them, it set off a domino effect that could pull the entire auto market back to reality. And as much as the industry hates it, this might be exactly what was needed. In the coming months, expect to see automakers adjust production strategies, financing arms retool loan programs, and new buyers flood the market looking for deals they never thought they'd see again. We're witnessing the reset of an industry that's been inflated for far too long. The bubble didn't just pop, it burst, and the echo will be heard for years. So what happens next? CarMax will likely ride this wave into record sales and data dominance, carving out an even larger share of the used vehicle market. Competitors will chase, prices will continue to fluctuate, and eventually, the market will find its new floor. But the message is already clear. The era of overpriced pickups is over. The average buyer just won. For years, people have joked that trucks are the new luxury cars. Well, not anymore. The balance has shifted. The middle class, the tradesman, the builders, the everyday workers who need these trucks, are finally getting a fair shot again. And whether it was intentional strategy or market desperation, CarMax just forced the reset button.